Another trading week is winding down, coming to a close right behind me here at the New York Stock Exchange. And stocks so far this Friday, they are seeing a bit of a rise. And this in order to start off the new quarter, this after the S&P 500, unfortunately, had its worst first half performance in decades. Now, despite today's gains, all the major averages posted their fourth down week in 5. The Dow Jones fell 1.3% for the week. The S&P lost 6.7%, and the Nasdaq finished lower by 4.1%. Investors remained focused on warning signs from several companies that lowered their profit guidance, adding to investor concerns that persistent inflation at decade-long highs could continue to put pressure on shares. And this all comes one day after the S&P 500 posted a more than 16% quarterly loss, its biggest one-quarter fall since March 2020. And for the first half, the broader market index dropped 20.6%, its largest first-half decline since 1970. It also tumbled into bear market territory, down more than 21% from a record high set back in January. But now it's time to look ahead. We have ourselves a full week of data, well, an abbreviated week here in the United States, and a lot of data is due that could possibly move the markets in either direction. So let's now take a look at what could likely move the markets in the week ahead. Now on Monday, we kick off a bit on the quiet side despite some data out of Germany. Most focus will be on the U.S. markets being closed for the Independence Day holiday. So we technically kick off the week on Tuesday, and Tuesday kicks off in Australia with the RBA rate decision due. Expectations call for a read of 1.35%, while the U.S. markets do reopen to the sound of U.S. May factory orders. They're expected at a read of 0.5%. Wednesday then sees us kick off in the European Union, this time with EU retail sales figures. Retail sales expected at 5.4% year over year for May, while here in the U.S. we have June ISM Services PMI due out. Expectations call for a read of 54.5, and we'll also see the release of the FOMC minutes. Thursday sees us in Switzerland first with that nation's unemployment rate. Swiss unemployment expected at 2.2%, while here in the United States, ADP private payrolls due out. Expectations calling for a read of 200,000. And Friday, that's all about the U.S. employment report. Non-farm payrolls and the unemployment rate both due out. Expectations call for non-farm payrolls to come in at 250,000. The unemployment rate 3.6%. And keep in mind, inflation, more earnings, volatility, fuel prices, all moving the markets as of late, and they should in the upcoming week as well. So keep an eye on all of those headlines. And until next week, live from the New York Stock Exchange, I'm James Sweeney reporting for ICM.